Hey everyone, and thanks for jumping back into the Cryptoverse. Today, we're going to talk about Bitcoin and we're going to provide an update to the bull market support band. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. It has been a little bit since we provided an update, so I do just want to go through a few different things. The bull market support band now ranges from 33K to around 35K. So a range of approximately $2,000 and still well below the current price action of Bitcoin. In fact, in order to get back to the 21-week EMA, it would require, at this time, about a 17% drop, and the 20-week SMA would require about a 22% drop just to get back to those levels. So one of the things we've spoken about this year, though, is the extension from the 20-week moving average, right? So like if you look at the short-term bubble risk, which again is just the extension from the 20-week SMA, you can see that we've repeated a lot of the price action in the early part of the year where we saw a brief extension from the 20-week SMA for a little bit before ultimately seeing it extend even higher, right? So there was sort of a build-up period over here where Bitcoin got above the 20-week SMA, and then in March it accelerated that move, got a lot higher, and the extension from the 20-week SMA was basically the highest it's been for most of the year, right? Except for what we've seen just in the last month or so. And now we're seeing something similar take place again, where there's a little bit of a build-up, and you get above that 20-week moving average, you kind of trend sideways for a while, just like we did over here, and then you see Bitcoin accelerate up again, just like it did back over here, and go to the extension from the 20-week moving average, which is more or less the same spot that it went to in March of 2020. Now, again, the interesting thing, and as we pointed out, even though the extension from the 20-week SMA back in March was the furthest in mid-March, we also know that Bitcoin did go higher a few weeks later, right? It just wasn't as extended from the 20-week SMA a few weeks later because, of course, the 20-week SMA had time to catch up. Another way to view this is by looking at the natural log of the price over the 20-week moving average and kind of seeing like it's just moved up to the same level it was at back in March of 2023. We've also looked at this in terms of sort of diminished extension from the 20-week moving average, the idea that the extension from the 20-week SMA from one cycle to another diminishes, right? You can see once upon a time it was pretty far extended, and as time has gone on, the extension from that moving average, the 20-week moving average, tends to diminish. And it's actually one of the reasons why, again, back in 2021, why I was actually quite bearish at the first peak. It wasn't because I thought the market cycle high was in. It was just because I said, look, in terms of the extension from the 20-week moving average, we're fairly extended at this point, especially given the context of history. And if we are to assume diminished extension from the 20-week moving average, then it might be a safe assumption to assume that we would get a summer lull in 2021, which is what we got. And while we did go to a higher price later on in 2021, the extension from the 20-week SMA was a lot less. Now, what you'll notice is that in 2019, we got close to this trend line, but we actually did not make it there. And so the question, of course, now is will it make it there, or will it sort of fade before it reaches it like it did in 2019? Sort of just put that trend line back on the screen. One of the interesting things is if you go to where the extension was in 2019 and draw a horizontal line across, you can see that it would actually go above that downtrend line for us to reach that extension above the 20-week SMA that we reached in 2019, sort of showing just how explosive that move was in 2019, right? And just how far above the 20-week SMA that the price of Bitcoin got. And in fact, from this level here, you can see the Bitcoin price was 120% above this 20-week moving average, whereas a few weeks ago, Bitcoin got about 48% above its 20-week moving average. So you can see that from one cycle to another, the extension above the bull market support band, or at least a component of it, the 20-week moving average, tends to diminish. Okay, and that sort of is in line with the idea of us seeing diminished volatility as a function of time. I will remind you that we saw a similar rally going into rate cuts in the last cycle as well. And, I'm not here to say that it has to play out in any specific way. It's just sort of an acknowledgement that this rally, at least this initial rally, before we had a cool down phase, this initial rally started to fade once rate cuts arrived. You can see that Bitcoin found a local high before rate cuts actually came in. And so the question is well, will it play out in a similar manner this cycle or not? Market expectations right now are that rate cuts come in March. So if it were to play out in a similar manner as it did in 2019, it would imply a local top sometime before March. I mean, it could be in January, it could be in February, who knows, right? But it would imply that if it were to play out in the same way that it did last cycle, where a sort of an intermediate top comes in, and then it fades it into rate cuts, and then sort of the next low is found by the last rate cut. That's what happened last cycle. We can of course see if that's what happens this cycle as well. But I do think that Bitcoin has been trending higher for a while now, and of course there's the spot ETF that everyone's talking about. And if it does rally into that, which again there's no guarantees that it does, but I mean Bitcoin has been consolidating right here and slowly trending higher. But if it does rally into that in early January, then it certainly could be time for a cool off period for a while until we go back to to QE and to looser monetary policy. But that'll be if it plays out in a similar manner as it did last cycle or not, which is no guarantee. And then I will sort of remind people just of that 100-week moving average. Historically, sometime around this point in the cycle, and actually it's occurred even later on in the cycle as well. We sort of retested that 100-week moving average, and it's not, it's just something that we sort of acknowledge that does seem to be something that comes in at a phase in the cycle. And in 2016, we did not have a hard landing. It was I guess you could argue that it was a soft landing. We didn't even have a recession back then, but we did have a recession scare where a lot of people thought there was going to be a recession. We didn't really have, an inverted yield curve or anything like that, but there were other parts of the world where their economies were slowing down, and I think there was some arguments that it could happen in the United States, and it didn't. And Bitcoin basically retested that 100-week SMA and continued to move higher. Whereas last cycle we retested it, got a bounce, but then ultimately fell through. So I do think that at some point, probably within the first few months of 2024, we'll see some type of back test of that 100-week moving average. And then the question of whether it holds or not will probably be dependent on whether the Fed achieves a soft landing or if it's a hard landing like the last cycle. So that is, I think, something to think about over the next few months. Just for reference, extension from the 100-week moving average last cycle reached approximately 94% before fading back down to it. You can see that so far Bitcoin has gone above about 57% or so above the 100-week moving average, and in line with the idea of diminishing extension from these moving averages. My expectation is that it might not reach the same level that it reached last cycle before that larger drawdown. I mean, just to give you an idea of how high it would have to go to in a very short period of time for it to reach, say, 94% above the 100-week moving average, it would have to go all the way up to over 50K. And I'm not saying that can't happen. It certainly could happen. The point is that's how high it went last cycle. We have seen diminished volatility as a function of time, but also do remember that the 100-week SMA is starting to curl up. So, it depends on where the price goes. I mean, if the price were to just trend sideways for a few months, then the 100-week SMA would then slowly start to come back up and sort of fall into higher prices. So that's an important caveat to it, is that the extension, the reference point from the extension is dynamic, right? It's changing, and so we should consider that when sort of thinking about how high above the 100-week SMA that it can go. But that is and by the way, I mean, if it were to extend, that far above the 100-week SMA, I imagine it would correspond sort of back testing that trend line that I know a lot of people have sort of pointed out over the last few months. But anyways, we'll see. We'll see what happens here as we get into the final trading. The final days of the year. Early 2024 should be an interesting time with this narrative, of course, around the spot ETF that everyone's been talking about all year. I think we'll finally have some type of resolution to that, which will be nice to see and see how price action unfolds between that event, whether it's good or bad, and the halving, which is coming up in April. But my expectation is that in line with prior cycles, I would expect some type of move back to the 100-week moving average. But again, it could still be a couple months away before something like that were to happen, especially given these narrative events. And we've really seen this cycle. A lot of price action has been driven by these narratives. If you think back to the merge for Ethereum, Ether Bitcoin was rallying up until the merge, and then right at the merge, Ether Bitcoin topped, and then it faded. We've seen prior institutional products launch for Bitcoin, and just after it, we saw the market fade. So and again, we have the Bitcoin halving coming up in April. So this does seem to be just sort of chasing one narrative, and just moving from one narrative to another narrative pretty frequently. But in my experience, narratives can always be used to explain price action. But oftentimes price sort of dictates the narrative and not the other way around, right? Like if price were to go up, we could find a narrative to support it. If price were to go down, we could find a narrative to support that as well. So that is sort of my at least initial view on the market. I do know, one other thing I wanted to at least point out is we are going to have that cross of the 50-week and the 200-week SMA relatively soon. You can see that they crossed here to the downside back in February, and now they should be crossing to the upside within the next couple of weeks, which is interesting because it seems like this is going to happen basically right around the time of that sort of event in the next few weeks regarding a spot ETF, sort of that cross to the upside as opposed to a cross to the downside. But anyways, we'll wrap it up there. Thank you guys for tuning in. Make sure you subscribe, give the video a thumbs up. Check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com. Link is in the description below. We put out several premium videos each week. We have a website with thousands of charts, not only on cryptocurrency, but also equities and macro and other things as well, commodities. So make sure you guys check that out. I will see you guys next time. Bye.